The collapse is happening right now. Hey guys, Britt here. Welcome to End Times Bible Prophecy. What am I talking about? I'm talking about the unfolding financial crisis in Japan. It's going to spread to the whole world, but it's starting in Japan. That's ground zero for all of this. We see it in the data. The only question is, when does the world wake up to what's happening? When do the markets begin to panic? Because that's what's coming. But first, let's take a look at this right here. So if you missed this, this came out yesterday over on brittgillette.substack.com. How close is the rapture of the church? Likely closer than most people think, and this goes through why we should believe that based on what the Bible says. So make sure to go check that out over on brittgillette.substack.com. Also, as a reminder, tonight is the monthly live Q&A with me and Jenny. That starts at 7 p.m. Eastern Standard Time. The link is at the bottom of Saturday's article on AI. What just happened is shocking. So if you want to check that out, make sure to go click on that link. A reminder will go out as well 5 minutes before that begins. So check your email for that if you don't already have that link bookmarked. So what are we talking about with this financial crisis? So going back to last year, we've looked at this article a number of times, how the current global financial crisis leads to biblical tyranny in 10 steps. We said at that time, the Bank of Japan is trapped. It has basically two options. They can, one, raise interest rates and destroy the domestic economy, which actually is what's happening right now. We're going to look at the data on that. Or they could lower interest rates and destroy the domestic economy. So as you can see, this is a big problem because Japan is the fourth largest economy in the world. And no matter what road the Bank of Japan chooses, it's going to really destroy the Japanese economy, and that will have ripple effects throughout the entire global economy. This is why we've been saying the greatest financial crisis in history is coming. It's inevitable. This is baked into the cake. And we'll look at the data that's starting to show that this is really building up. We're seeing all of this happen. So first, let's take a look at some of these. We went over this about 10 days ago, I guess it was. But we've been seeing up until recently surges in the interest rates on Japanese government debt. So here we're looking at 40-year Japanese government bonds. And you can see how they've gone from interest rates a little over 0.5% up to 3.1% now. As recently as 10 days ago or so, they were at 3.5%. Now we've seen this surge downward. What I believe is happening here is we're seeing the Bank of Japan sell U.S. Treasuries. So if you've heard in the news, well, U.S. Treasuries are getting sold off. Nobody wants U.S. government debt because the United States is so indebted. Well, the U.S. debt relative to its GDP, or total economic output, is half of what it is in Japan. What I believe is happening is those treasuries are being sold by the Bank of Japan so that they can then use the proceeds to buy back their government debt, thus sending the yield down. Because if the rates run crazy, well, a couple of things happen. We're going to look at one in a moment. One is the interest on the national debt skyrockets, and eventually it bankrupts the government of Japan, and they have to default on that debt. But the Bank of Japan is going out there selling their U.S. treasuries in order to get the cash to buy back their debt so that they can avoid for now printing yen just out of nothing to buy back that government debt, which they also do. But that would lead to massive hyperinflation as they go down that road, which eventually they're going to have no choice because they're going to run out of treasuries to sell, U.S. treasuries to sell. We see this same with Japanese 30-year debt. We've seen these interest rates go from around 0.5% up to around 3% now. So when this debt goes up, when these interest rates go up, it means the prices of those Japanese government bonds go down. And we've seen similar things happen in the United States. We saw when the Fed started raising interest rates, we've talked in the past about the FDIC has reported U.S. banks are sitting over half $500 billion in unrealized losses on their bond holdings. And they say, oh, well, that's fine because they're unrealized losses. And that's true until they become realized, as happened with Silicon Valley Bank back in the fall of 2023, or not the fall, but in the spring. Around March 2023, we saw the second, third, and fourth largest bank failures in U.S. history, even accounting for inflation. These were huge bank failures, could have led to a run on the global banking system. The Federal Reserve made some moves to prevent that from happening. We've talked about all of that. But that was a result of all of these unrealized losses at these banks that became realized once the depositors showed up and said, give me my cash. And so we're seeing the same thing happen here with Japan. So we're seeing the interest rates go up on their debt, and that leads to things like this that we read in the Japan Times. It says Japan's biggest life insurers post $60 billion in unrealized bond losses. So this is from May 26th. It says 4 of Japan's biggest life insurers reported that unrealized losses on their domestic bond holdings in the last fiscal year reached about $60 billion in total, underscoring the risk they face as interest rates climb. Maya Yasuda Life Insurance said paper losses on its domestic bond holdings increased more than 8-fold at the end of March. Sumitomo Life Insurance suffered similarly in the debt market, with unrealized bond losses more than tripling over the same period. Combined with similar figures announced earlier from Nippon Life Insurance, the biggest firm in the Japanese sector, and Dai-ichi Life Holdings, the paper losses amount to about 8.5 trillion yen, around 4 times the total from a year before. Life insurers tend to be big investors in super long debt because they need assets to match their liabilities from insurance policies spanning decades. An especially steep sell-off in Japan's longest bonds pummeled the companies as investors grew concerned about falling demand for the debt at a time when the central bank is scaling back on huge bond purchases. Across Asia, life insurers are facing billions of dollars in paper losses from the market rout sparked by reactions to Trump's policies. Again, look, this is why people hate the media. There's no need to insert that in there. It's not because of Trump's policies. It's because of these crazy, absolutely insane policies pushed by the Bank of Japan for over 35 years at this point. And finally, we're getting to the end of the road where they can no longer, these policies aren't working anymore. But Japanese insurers also face risk from a central bank, yes, that's looking for opportunities to raise interest rates further. Negative factors such as those fueled a tumble in 30-year and 40-year Japanese government bonds that last week saw yields rise to the highest since they were first sold, though they've pulled back on Monday. Unrealized bond losses don't necessarily lead to actual sell-offs because insurers tend to hold the notes until they mature. Yes, unrealized bond losses are unrealized. They're fine until they're realized, and then it becomes a big problem. As they state here, the insurers may need to sell the bonds, for example, If rising interest rates prompt investors to cancel insurance policies, to put their cash and assets with better returns, and the companies might also sell lower yielding debt to park their funds and bonds with higher coupons or higher yielding rates. And then also they could experience larger than expected insurance losses, in which case they would have to sell those in order to make those payments. So, and if so, it could lead to the bankruptcy of these insurers. So this is a problem right now that we're seeing in Japan with these rising rates, to where it's bankrupting not only the life insurance companies, but pensions as well as banks. So we have Norinchukin Bank is the second largest bank in Japan. There's many reasons. We've been over this in the past as well, as to why you could look at their balance sheet, their financials, and say they are insolvent. And they've needed multiple bailouts over the past several years in order to stay functioning and operational. And the same can be said of some of the largest banks in Japan right now. So if these interest rates continue to climb, it's a threat to the entire financial system of Japan, the banking system, the big life insurance companies, and the pensions as well. And so we also see this. So we see, and this is part of the problem. This is from the Kobayashi letter. It says, prices in Japan are soaring. The cost of rice jumped 98.4% year over year in April, posting the biggest monthly jump since 1971. This is an acceleration from the 92.1% surge recorded in March. Energy prices rose 9.3% after the March phase-out of Japanese government subsidies for gas and electricity. As a result, Japan's inflation CPI, excluding fresh food, they always exclude, well, we're going to exclude food and energy as if people don't need those every single day, rose by 3.5% from the previous year, up from a 3.2% gain in March. This marks the fifth consecutive monthly reading at over 3%. Meanwhile, Japan's economy shrank by 0.7% in the first quarter, the first decline since the first quarter of 2024. Japan has entered stagflation. And this is part of the problem. We have rising prices, we have inflation throughout the Japanese economy. And so in order to combat that inflation, the Bank of Japan says, well, we need to raise interest rates. But if they raise interest rates, well, then it destroys their banking system, their life insurance, all the life insurance companies, all the pensions. So they have a complete collapse of their financial system, as well as eventually default by their government on the debt, because the interest on the Japanese government debt will become unbearable. And so what do? If they back off from raising those interest rates, well, then you get even more inflation than they're already having. Then we have other problems as well. We read this with CBS News. It says Japan's population is shrinking. Here's what it means and what some are doing about it. It says modern Japan sounds like a sci-fi premise, the incredible shrinking country. Japan may have one of the longest national life expectancies, about 85 years, and the world's largest city, Tokyo. But the nation's population has been in decline for 15 years. Last year, more than 2 people died for every baby born, a net loss of almost 1 million people. And now the island nation is on pace to shrink in half by this century's end. The diminishing population is Japan's most urgent problem, says Taro Kono, a longtime high-ranking minister in Japan's parliament. Kono, nearly elected prime minister in 2021, said he intends to seek the highest office again and believes the country should prioritize combating the population decline. He says this issue impacts every sector: the economy, education, housing, national defense, and the culture of Japan. There are less and less number of a young generation, Kono said, and all the burdens are on the young generation, and they won't be able to sustain So society is going to be breaking up. Economy is just going to stagnate. And again, it's going to do more than stagnate. As he says, they're going to have a societal breakdown because all of this burden can't be put on the younger generation. The productivity simply isn't going to be there to pay for all these social programs and the massive government spending in Japan that's led to a debt load, that's a debt burden that's twice as bad as the United States, which is pretty terrible, frankly. And so this is what can't continue, won't continue. And so let's go back to the Kobayashi letter, because here they had this post that really outlines exactly what the issue is, why we see this collapse unfolding right before our eyes, and what it means for the world. So this says, what is happening in Japan? And this was from the 25th, so it's been 10 days or so since this came out. But it's still applicable. This is a slowly unfolding crisis, slowly unfolding until all at once, suddenly, it becomes a global panic. And that day will come. It says, what is happening in Japan? In 45 days, Japan's 30-year government bond yield rose a massive 100 basis points, that's a percentage point, to a record 3.2%. So it went from 2.2% to 3.2% in just 45 days. Over $500 billion worth of, quote, safe 40-year Japanese government bonds have lost over 20% of their value in just 6 weeks. Is Japan's bond market imploding? It says what's happening in Japan is not normal. Japan's 40-year government bond that was yielding around 1.3% 2 years ago is now yielding 3.5%. As yields continue to surge, inflation has begun to rebound, and Japan's economy is in decline. It appears Japan is entering recession. The surge all began when the Bank of Japan made a major policy shift. After years of buying bonds, the Bank of Japan stopped doing so. And again, think about this. So the government issues debt, and then the Bank of Japan, which is a quasi-government entity and responsible for printing the nation's currency, and thus capable of printing its currency to buy those bonds, decides we're going to print currency and buy the debt back. We would all be arrested for doing something like this, right? If we did anything like that, anything remotely like this in the real world, we would be arrested. But central banks all over the world do this every day. It says, after years of buying bonds, the Bank of Japan stopped doing so. This resulted in much more bond supply hitting the market, which drove yields higher. And the Bank of Japan has a colossal balance sheet still. In other words, they still own half of all the Japanese government bonds. That's how much of this they've bought and why we're at the end of the road here. And it says that right here. It says, in fact, the Bank of Japan now owns a whopping 52% of all domestic government bonds. By comparison, life insurers, banks, and pension funds hold 13.4%, 9.8%, and 8.9% respectively. The Bank of Japan still holds a massive $4.1 trillion of government bonds on its balance sheet. Furthermore, the Japanese government now holds $7.8 trillion of debt. This makes the Japanese government the third most indebted government in the world behind the United States and China. As we're seeing in the United States, rapidly rising government debt has left bond investors worried. And again, I think that what we're seeing in the United States is a result of the Bank of Japan selling U.S. treasuries, selling U.S. debt, in order to have the cash to go buy back their own debt and send those yields down. Japan's debt to GDP ratio recently exceeded 260% for the first time in history. Their debt to GDP ratio is roughly double the United States. It's also one of the top 5 in the world. Last week, Japan's prime minister warned their financial situation is worse than Greece. And again, Greece is a smaller economy that 10, 15 years ago brought the world to the brink of a massive financial crisis all on their own. And they were nowhere near as important to the global economy as Japan is. As we saw in the US last week, Japan's bond auctions are now spurring weaker demand. When there's less demand, bond prices fall and yields or interest rates rise. As the Japanese economy slows and uncertainty rises, yields are accelerating. This will be highly damaging to Japan's economy. We're already starting to see the effects of both tariffs and rising yields. In the first quarter of 2025, Japan's real GDP contracted 0.7%, much more than the expectations of 0.3%. This marked the first decline in Japan's GDP since the first quarter of 2024. We expect to see more weakness ahead. Meanwhile, Japan's CPI inflation hit 3.6% in April, rising 0.4% month over month. CPI, excluding fresh food, again, they like to exclude things you actually need, jumped 0.7% month over month, the largest monthly increase since October 2023. On an annual rate, it accelerated from 3.2 to 3.5%, the fastest since January 2023. Stagflation is here. We've seen similar trends in the United States, with the 10-year note surging above 4.6% last week. Again, I would expect this is the result of Japan selling these, the Bank of Japan selling these, in order to buy back its own debt. It says the U.S. is now seeing debt to GDP levels that are around 10% above World War II levels when we fought a cataclysmic global war. Such a rapid surge in debt to GDP led to the Moody's downgrade of the U.S. credit rating on May 17th. However, this is still only half of what Japan is seeing. Japan needs a major restructuring. Finally, to make things even worse, real wages are declining sharply in Japan. Real wages fell 2.1% year over year last month, marking the largest drop in over 2 years. So as inflation rebounds, real wages are declining. The Bank of Japan cannot hike rates into this environment. So they're saying, facing this problem of inflation, well, they can hike rates because, as we looked at, it's going to destroy their financial system. The problem, however, is they can't leave rates the same or cut rates, because if they do that, they risk triggering hyperinflation and impoverishing all of their people, and probably ending up with the same result, a collapse of their financial system and default of Japanese government debt. No matter what they choose, this turns out in a very bad way. And that's exactly what we read here in this tweet from Gold Telegraph. Japan printed itself into a corner. And that's exactly what's happened. They have years and years and years, decades of terrible policies, of totally insane, crazy policies. We're going to issue debt, then we're going to print currency to buy the debt back. Again, you and I would be arrested for this. Decades of those policies are finally coming to an end. They've run out of room to extend and pretend and kick this can down the road. No matter what they choose to do, it's set to fall apart. So what does that mean? Well, read this from Finance a Lot tweet. It's from May 26th, so again, several days ago. I think this has changed a little bit, but Japan's bond market liquidity has dropped to 2008 Lehman Brothers crisis levels. Are we about to experience another financial crisis? And guys, I believe the answer is a clear yes, and not just a financial crisis, the greatest financial crisis in the history of the world. You can have the 4th largest economy in the world have these types of problems in an interconnected global economy with quadrillions of dollars in derivatives in the financial system. And again, global markets, stock markets, bond markets, all interconnected, and have the fourth largest economy in the world essentially blow up. And, oh, it's smooth sailing. No, we're going to have a major financial crisis. And again, I believe, where does this lead? Well, it leads to biblical tyranny, right? That's what this whole article was about. Again, I'll pin this at the top of the comments if you want to go read through this article again. But this essentially, in the aftermath of this financial crisis, they're going to say the way to prevent this from happening again, or the way to save us in the midst of this crisis, is we need central bank digital currency, tokenized assets, and digital IDs. And they're going to lead the world, all the global leaders, politicians, central bankers. They're going to lead everyone right into this cage, this digital cage, this digital trap. And there will be no escape. And all of this, it isn't the mark of the beast system yet, but it is indistinguishable from the mark of the beast system that we read about in Revelation chapter 13. Eventually it will become that. But so it doesn't mean we're going to experience that, but we could experience the foundation being laid, this infrastructure being put in place. So it's important to be prepared. That's why we bring this up. That's why we talk about this. But also we talk about this, guys, because it should fill you with hope. And I know that sounds strange, but if you see all of these things happening, when you see this crisis coming and what the likely outcome is going to be, that they're going to put this digital tyranny into place, they're going to establish the foundation, the infrastructure for this mark of the beast system, that's telling us Jesus Christ, his return, his second coming is near. And that means the rapture of the church is even closer. Again, that's the article we did yesterday, talks all about that. How close is the rapture of the church? So guys, all this should fill you with hope that we are going to see Jesus sooner rather than later. So make sure that you're doing everything you can to share the good news with as many people as possible. So let me know what you think. Leave your comments below. Again, remember, tonight at 7 p.m. Eastern Standard Time is the live Q&A with me and Jenny. If for whatever reason you missed that, the replay will be posted on the Substack tomorrow. So again, let me know what you think. Leave your comments below. And God willing, I will see you on Friday.